Hi, and welcome back to CMD Aerospace Trading Channel. Um, this is a weekly FX market forecast on DXY, gold, and JPY. Right. So if you are new on this channel, we give you a weekly forecast purely on technical analysis. Right. And then in the course of the week, we use fundamentals or other factors of confluences to ascertain if whatever we have as our initial analysis or projection is actually going to what play out. Otherwise, we inform you, we give you updates, live updates in our Telegram channel, right? And then the description or the link will be in this video description for you to what follow up for free via VPIs. And then if you are interested in free signals. But if you are interested in the VPI, then we provide. Now, someone may ask, what is the difference between the VPI and VIP? Why am I saying VPI? VIP is that in the VIP we actually take more risks, right? We take more risks because the mentees or the people in that group really believe in what taking more risk, right? And then they believe in whatever I see. But for the free, I usually will do only the analysis, the initial analysis, and I don't really say much. I will only say much when I see that the initial setup is actually playing out, and then it is on the massive high side. That is when you see some free signals here and there. But otherwise, I don't give. But in the VIP, we give more. In fact, we are aggressive. We are more aggressive in that group. So that's what we do. So sometimes in the initial setup, it may look like things are not playing out. We will come and then we tell you, oh, market didn't go well initially, or in the free channel. But on the other side, we actually took risk and then we were profitable. Right. Now, before we continue with week 30, 31st week, right? We'll do a recap like we do always, right? So the recent week, which was week 30th, we're expecting that in on DXY, in fact, in DXY environment, we're expecting that there will be a bullish trend where a massive pull up or rally on DXY, right? So we see this green purple area, rectangular area, meaning like a consolidating area for a rest, and then the market will zoom up, right? The market actually began here. If you see week 30th, with 30, you see here, market initially, like we said, the Mondays and Tuesday, I think, market actually did what we expected. Now, when it got here, there was some news inside fundamentals. So usually, the technical will do the technical, but for you to be on the safer side, I always give this advice that if you are not a swinger in quotes, right? You don't swing for you are not in the trade for a long time. You don't stay in the trade for a long time. And then there are these massive news coming up. It's better you exit, right? And then wait for another uh probable what setup, then you enter. So it may seem or it may happen that the analysis for the week will be profitable, will be correct. But in your case, you run at a loss. Why? Because you didn't know where to enter and where to exit. It's very, very important in this profession. Where to enter and where to exit. When to stay away. It's very important. We have actually captured all these lessons in our structured FS lesson in the beginners, intermediate, and advanced. Check in this video description if you are new here. Watch that to have better understanding of this profession or discipline. So that is it. So generally, market didn't move the way we expected, right? But on the other side, we may be profitable, right? I was profitable in some areas, but not generally the whole week. Normally, it happens that way. So the analysis may not go that way, but it doesn't mean we run at a loss totally because we know when to enter, when to exit. But if you realize that in the free VIP, the free channel, I only put the DXY or JPY, and then I tell you this and that. But bear in mind, that is not enough. If you're not smart, you don't really know your left and right from there, you may see this, but you'll not be profitable. So that is what I'm saying about that. So sorry if you run at a loss. In fact, it's part of the what the journey, right? So this is what happened. And then the news were, I think the news were, I don't know, is FOMC. Yeah, very, 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 very high impact news. When it happened, it's very strange. In fact, very massive in the market and can be outrageous if you're on the negative side of it. So this is what actually happened, right? So generally, market didn't move the way we expected. Now, moving forward onto the 31st week, right? So I am not going to do massive analysis here. I'm not going to do anything because my analysis is a build up. If you have been on the channel for a long time, you understand this, right? If you are new and you want to start from week one, you can actually do that. We are only week 30. You can work these videos that I think the maximum minutes is 20, 25 minutes or so. The least is 20, 15 minutes. You can actually do this to follow up. So we do top-down analysis, right? So let me just move up to the weekly chart, right? Bear with me. This may look a bit messy because I do description in my analysis as in I write the week and I do some markings, right? So on a higher time frame, like the weekly time frame, you realize that the horizontal lines are quite close to each other, right? But if you move down to the lower time frame, they are very well distinct, right? So just bear with me on this. Just watch out for the candlesticks, right? So if you worked on the weekly time frame, it's obvious that we are experiencing what a reversal what movement in DXY, right? The market is what selling and it's very strong selling here on the weekly time frame, right? You can see what is happening here. We are experiencing a strong sell, right? So let me just do something here. Bear in mind, I trade shapes, I trade patterns. Is one of my strategy. I as a confluence or so, I use it to help me in my trading or my analysis. So you can see that V shape. I normally trade V shapes, M shape, and then the L shape, right? You may have some fancy names for them, but I just go according to the name. So this is what you see. So you see that at this end, the highest point, market is what reversing, and we are experiencing what a dip. It's as simple as that. I'm going to clean this out so that it doesn't look messy when I move to the lower time frame. So my analysis here is very simple. I don't do any complicated things here. The only thing you have to bear with me is the markings here, the horizontal and the description. It looks kind of quite messy. So you see, and the dip here on Friday last week, the market was very, 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 very steep. So that is what you see on the weekly time frame. Generally, bearish, strong bearish. Let's move to the daily time frame and see if we can see some confluence there. Right. If you check on the daily time frame too, still the sell is very strong. You have even broken the recent support level. You have broken that. Now you can see down here that I have a marking here, which I am hoping will be what our current support and market will move up, right? Why am I saying that? Whenever you see blue lines, right, they are my resistance and support levels, depending on the current price level, where the price is, right? So if I should go back, you understand what I'm saying. I don't go back too much. I just take from somewhere. Look here, see this point. My support level one that I've marked so far, right? And then even within, bear in mind that within levels or within any shape, we have something called cascading or nested. So we may have a consolidated market from a higher time frame, but when it comes to a lower time frame, you see that there's another kind of consolidation happening within another consolidation. So I just borrowed this tech word like nested or cascading. So that's what you have to be watching at when you are trading. So when you get to this level, that is when you have to exit and then wait and see if market is going to respect that level or is going to break it. So that is what happens. So if you don't watch out for these things, you may be riding too much. I don't know. You understand what I mean? There are times you have to ride to a level, you pull out, and then you come back to watch the market to see the behavior around the sellers and what the buyers, their behavior, right? The psychology behind whatever is happening, checking the candlestick patterns and then the charts, right? We have treated candlestick charts and then patterns. You can watch that to help you do that in the intermediate playlist. But I use one video in the advanced playlist to address all the charts and patterns, right? In a snapshot, very informative. So you see here, what I'm saying, the nested one, even within here, respected. Now, the current price here, let's check here. You see that, the respect has went on for a long time. 1, 2, 3. Check here. In fact, 4. So the fifth one was when that was last week. So you realize that I was expecting that market will respect it again. And then lo and behold, unfortunately, it was rather unfortunate that market broke that. There's a behavior that we call this. Some guru or senior traders will say that when prices keep hitting some point or a level, it means that that level is getting weak. That is what they say. To some level, I agree with them, and then to some other level too, I don't. Right. So you have to check this, and with time, as you are trading, you don't trade. You just only don't trade. You trade by monitoring, steady. Right. That's why we have back testing and forward testing. I've also addressed that in the playlist. Check this. Very informative. So with time, you yourself, you try to develop some strategy. You begin to understand how the market moves, the behavior and everything, the psychology, right? So that is what I was expecting. So lo and behold, it failed. And normally when they fail, the effect is very, very, very strong, impactful, right? So that will bring us to this topic that I intend to treat in this coming week, which is called fake out and then breakout. How to spot these things, right? So I'll treat that in the recent video. I think I've done a flyer and then I've posted on the various social media platforms. So you see, so this is what happened actually. So it broke up, it broke it. So this is what a breakout, right? So, and I may call this a fake out, right? So when you got here, I was expecting the market to go up. Then not knowing it was actually rather a fake out. It faked me out. So that is a borrowed word in trading, right? So that is what we can see here. So now back to the analysis again. We can see that on this daily time frame, the market is very steepy, selling, dipping, plummeting. So that is what we see here. So we are still in that mood, right? We are going to be in this mood for the pending week. If anything, I'll come back to tell you. But so far, this is what's going to happen. But bear in mind, there's another thing I tell you always, that the market does not move in a straight line or can be moving in a straight line, no pullback or retracement. It never happens. So even though it will move or be selling strongly, it will not move strong in that steepy or straight away. There may be a consolidation for some time and then we continue, or maybe even in fact reverse. Bear in mind, we are still around this blue line, which I can say it has been broken it. It has broken it. So it's now a kind of a resistance, right? No problem. This market can actually open again this week here and then start going up. It doesn't matter. It can happen. It can go up even to this level. Let me do some marking here. It can even move up to this level, this current level that we are here, before starting to come down again. So those in swing trades, you have to be very careful. Do that subjectively. You have to check if you can still, you have the confidence to still be in that trade. It's up to you, right? But trust me, market can open and come back to that level before coming down again, right? So, but generally, we are experiencing a sell or plummeting environment. Going back, look here. So this market, I'm expecting price to actually move here in the course, maybe probably latest by Tuesday or Wednesday, the market start going up or may continue. Right? But generally, we are in a dip environment. Look at that. So you see here, that is why I have this marking here. Good. So the same thing is applicable on the 4-hour time frame, right? A minute. So if you check here on the 4-hour time frame, for that, it has even gone past it a long way. See a strong bearish candle. Wow. Those who were in this trade would enjoy greatly. So I think that will be the end of the analysis on the 4-hour time frame, right? Or on DXY generally entirely. So you see what is happening here. So if you come down here, you see where I mark this. So I'm expecting price to actually move here, or better, so you see some small bullish candlesticks forming here. It doesn't matter. They can actually get here and then start moving up. So update will come in the Telegram page. Watch out. So now let's move to the JPY. Right. So JPY last week, I was expecting a bullish JPY to some level, right? I think I've cleaned out that. Oh, okay, they are here. I told you I don't clean out some markets unless after doing the next one. Then so here the 30th week began from here, right? And I was expecting the market to actually continue going down or move up to this level, which I assume to be what the supply zone, sorry, and then start dipping. But not knowing, but notwithstanding, I told you JPY doesn't the economy, Japan's economy is not like that of DXY, where they try to do things diplomatically. They actually allow the economy to do its own thing, right? But JPY can actually come and then intervene, right? JPY, that's what JPY. So trading JPY, you have to be very careful. Even though I trade JPY, I don't trade JPY as often as DXY, right? But one thing about JPY that if you catch the move from the onset, in fact, you are going to enjoy. In fact, for a whole week, sometimes in fact a whole month. I'm not exaggerating. Sometimes a whole month you can be enjoying the ride. So that's what we are experiencing now. So you can see that all my levels, it has broken them. All the levels, it has broken them. In fact, we are heading to the last two. In fact, okay, they are more at the top. But notwithstanding, it can reverse to some level around this place and then keep moving up. But now we are enjoying. So my advice can be that on JPY, you can still be in the trade and be monitoring. Enjoy if you are on sales on JPY pairs. You can enjoy them if you are selling in string. Continue, but be watching out because when it reverses, when they intervene, a whole candlestick on 4-hour candlestick can actually move back to this area. This area, I'm telling you, can actually move back to this area. So trading JPY, I'm very cautious about that. So I hardly put setups on JPY, but when I catch it, in fact, it's a rosy one. So I wouldn't say much on JPY. JPY is, you don't need much analysis on that. You can actually do that in the course of the week or the day, right? So it seems for a long time now, I have not been doing analysis on gold, right? But that doesn't mean I don't trade them. I trade them actually. If you can check here, look here. I've been trading it. But just that gold is, you have to be very careful. One problem is that gold can actually give you money, give you funds, give you capital, give you money, cash, within few minutes or few seconds. And then the market can check it back again. So trading gold, you have to be someone in quote, people call guru. You have to be guru in that. It should be your niche, right? Some do not want any wahala. So they only trade gold to have more full attention to that and trade it alone. So that is why I hardly put setups in that free VIP, free channel. But I actually trade them. Some of them, I'm very profitable on them, right? But when I'm trading them, I have to be very careful with the combination. I don't do concurrent trading on accounts with gold, especially. Sometimes it could be a separate account on its own Yes, on its own. And I do that. Going back, you see, this is how profitable I've been on gold. So I actually trade gold, right? You see here. But I'm very careful before I enter gold. I have to be very careful. Check the move on DXY, right? Giving me a firm confirmation or confidence before I do that. So this is it. So this recent week, I was in this trade, right? I got to this level, the market started reversing, and I exited, and I've entered again. But this time it's a pending, hoping that it will start coming down again. So that is on gold. But I am not going to make it like a firm analysis for you to actually follow this. If I come back to give you a setup, then you can follow. Else, it's at your own decision, right? So that'll be all for today on the weekly 31st FX analysis, right? So on this channel, we don't only do FX analysis. We provide you some financial insight, knowledge on the market. The financial market is a broad one. We have stocks, we have stock indices, we have the FX, we have crypto. So if you check on my watch list, these are the pairs that I trade, right? DXY, JPY, the GJ we call EU, EJ, TU, right? Gold, BTC, the Notcoin. It's not like I trade it, but I have fans there. I've just monitored the move. I don't trade like the way I trade other pairs in FX or whatever. And then stock indices too. I do that, right? But I'm only biased. I'm very biased on stock indices. I only trade NAS 100, US 30, and the German 30, right? I'm very biased on that. I only trade in the bullish trend on this pairs. Else I wouldn't be more. I won't concern myself with it in that way, right? So thank you very much for watching. Please like, subscribe, and share. And then watch out for our next video on breakouts and fake out in FX environment. See you in the next video. Protect yourself and trade wisely. Bye for now.